Hello everyone, welcome to Cheongfuli Weekly Report. We bring you the latest price and market analysis of China's steel market every week. Spot prices trended weaker this week. As of press time, spot rebar prices fell 20 yuan per ton week on week, while hot-rolled coil spot prices dropped 30 yuan per ton week on week. Market trading sentiment weakened month on month, with overall trading activity declining further. From a macro perspective, US non-farm payrolls came in far below market expectations, and the previously reported figures for April and May were revised down by a combined 74,000. The momentum of employment growth has slowed markedly, sharply cooling market expectations for interest rate hikes. On the supply side, total output edged higher. Total output of the 5 major steel products stood at 8.6416 million tons this week, up 52,500 tons week on week. Meanwhile, molten iron output posted another modest weekly increase. Given current mill profit margins, molten iron production is set to stay elevated in the short term. By product, rebar output rose slightly to 2.1652 million tons, a week-on-week gain of 32,700 tons. HRC output edged up to 3.0228 million tons, rising 17,600 tons week on week. Demand saw a mild recovery. Apparent consumption of steel totaled 8.421 million tons this week, climbing 212,700 tons week on week. Broken down, apparent rebar consumption reached 2.1002 million tons, up 212,700 tons week on week. Apparent HRC consumption hit 2.9329 million tons, rising 11,800 tons week on week. Despite the week on week pickup in demand, market participants remain bearish on the outlook, with speculative buying muted. Steel inventories kept building across all major grades. Total stocks of the 5 main steel products reached 16.2305 million tons, expanding by 220,600 tons week on week. Breakdown: rebar inventory stood at 6.8989 million tons, up 65,000 tons week on week. HRC inventories hit 4.3868 million tons, a week-on-week increase of 89,900 tons. Overall, China's domestic steel market ran soft this week. Steel output declined less sharply than demand, leading to further inventory accumulation and weaker fundamental conditions week on week. Molten iron production remains high at present, yet downstream domestic demand has entered the off-season, leaving limited room for further gains in end-user construction and procurement activity. Supply-demand pressure in the domestic steel market is mounting gradually. Market sentiment remains pessimistic for the time being, and steel prices are expected to fluctuate weekly in the near term. Future price movements will hinge on shifts in steel supply and demand, as well as coal mine resumption rates. Based on the above analysis, operational recommendations: purchase steel strictly on an as-needed basis to mitigate inventory risks. Institutional views hold that the steel market has entered its traditional off-season, with weakening demand continuing to weigh on steel prices. Nevertheless, intensified safety inspections at domestic coal mines in the near term will keep providing cost support from the raw material side. Market participants will closely monitor potential positive policy signals to be released at a key national conference scheduled for late July, which may boost market sentiment. Overall, steel prices are expected to move sideways with fluctuations in the short run. In summary, steel prices will generally stay in a fluctuating sideways trend. Close attention should be paid to changes in steel inventories and domestic coking coal supply. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.